I just made $5,000 trading gold. My strategy is very simple. It's about 25% market structure and about 75% macro bias. In this video, I'm going to be breaking down exactly how I caught this move, the setup, the macro drivers behind it, both short and long, and how the market structure lined up perfectly with my fundamental narrative. So let's jump into it. So first, I want to talk about a short setup that I actually took from these all-time highs. So when gold was pushing to these all-time highs, sentiment was honestly just euphoric. Everyone was calling for a breakout and a continuation above those highs. But when you look under the hood, the macro backdrop wasn't fully supporting those prices anymore. Started seeing the US dollar regaining its strength as treasury yields pushed higher, driven by stronger than expected US data and a bit of relief in global risk sentiment. That dollar strength tends to put pressure on gold, leading into this massive drop-off. And honestly, we had 9 weeks in a row of gold closing on the weekly candles as bullish. Historically, when that happens, we are due for at least a 3 to 5% drop in gold prices. I was positioned perfectly at those highs. You can look at my previous video and see exactly where I caught it and my exact breakdown on that as well. So on the chart, I saw this clear exhaustion, momentum divergence, overextended structure, and this heavy rejection. That gave me enough conviction for a short around these areas and taking it all the way down to this swing low. I could have held this a lot longer. I like keeping a fresh macro sentiment that supports continuing to go lower. And unfortunately, I didn't have that, so I ended up tapping out a lot earlier than expected. So after this massive move down, I wasn't looking to chase this for much longer. I wanted to see the market stabilize and start building structure again. And we did do this around this area right here. We formed a range and ended up breaking this range low and then continued lower. Global demand stayed strong as well. Central banks were still buying and ETF flows were starting to stabilize after the market sell-off. So add in some renewed uncertainty in broader markets, and then that's basically just adding in early ingredients for a gold bottom forming. From a structure perspective, I continuously saw lower lows being made and lower highs as well. With all this momentum flattening and volume drying up to the downside, all the signs that we were just kind of losing steam here, that told me that there was going to be an accumulation that was going to start to take place. And you can see very clearly the accumulation that we've been in for a while now. So for this long setup, once the macro turned supportive, weaker dollar, falling yields, and steady demand, the technicals just started to confirm it. Price had built a solid base around here, and we had continuous rejections off this zone right here as well. What was bothering me a lot was this zone right here that was continuously being rejected off of. I thought we broke through it right here, and then we continued lower and continued to continue lower. I actually took a gold short right here on November 3rd and was very confident in this move. I was up around $8,000 once we hit these lows right here. As we rejected off of it, I did break even on this trade. I was hoping to see a continuation downwards from this point on, and this is when I just get very smart about setting break evens on this. But all this in mind fuels why I end up taking gold longs. So once hitting a break even on this, I sit back and I reevaluate what the macro drivers are. What kind of structure are we making currently? And now seeing this on a lower time frame market structure, you can see this swing low is still intact. This swing high is still intact. I'm not really counting this because this is a weak structure point for me, but seeing this low right here being respected from this low here, this is giving me more confidence that we are going to be in a bullish market structure. So from a market structure perspective, we are forming our typical pattern to continue to the upside right here. So from the price building a solid base and breaking through key resistance with conviction and started respecting some new higher lows, this was my cue to flip my bias and take longs. And to me, this wasn't just a bounce style play. This was me positioning myself for the next leg higher as gold transitioned from its correction down to a continuation under a renewed macro tailwind. So since then, the structure had played out beautifully for me. Clean trend formation, higher highs and higher lows, all backed by improving fundamentals. That's what I mean when I say macro drives direction. Structure drives my execution. So before we take a look at exactly how I took this entry on a lower time frame, I want to talk about the key macro drivers that supported this, because as you can see, we are in a good range on gold, and for me taking longs from this point from the middle of a range would make no sense unless my macro bias confirmed this. So the first thing being, on November 4th, Federal Reserve maintained a higher for longer tone on interest rates despite a recent rate cut, and the US dollar rallied to a multi-month high, weighing on gold. On November 5th, private US employment data came in stronger than expected, which initially should dampen gold, but markets also saw sentiment soften, sending some safe haven flow into this gold trend. On November 6th, two major themes came together. Dollar weakened after its recent high, and its safe haven demand rose due to the ongoing US government shutdown drama. Uncertainty increased, which obviously favors gold. The shutdown itself, now being the longest on record, and the unfinished labor/economic data meant investors were eyeing weaker growth ahead, which boosted interest in a non-yielding asset like gold. All this comes down to is a weakened dollar, renewed safe haven demand, created favorable conditions for gold to have this rebound. Technically, after the drop in consolidation, these macro shifts offered us a clean catalyst to flip our bias toward longs. And scaling in down to a lower time frame, to look at this entry specifically, we had continuous highs and lows of structure being built. And for me, with basic market structure, for every high, a higher low has to be made. So in this case for me, I ended up taking my trade based off seeing a reaction off this higher low. So with the reaction off this higher low, this does confirm to me that we are going to respect this higher low. So I took this off a 1 hour candle closure after seeing the rejection off of this zone. And to me, with it being respected, I put my stops below this low with a little bit of breathing room and targeting the range breakout on the highs. For me, I could have held this a lot longer, but I do want to see gold starting to make some good structure points in this area right here, whether we should be going long or short, just to kind of give me a fresh market structure bias along with a fresh macro bias. When we are in a range like this, it is very difficult to get your footing and understand which way we're going to be trading. So that's why it's super important to have this macro bias behind you fueling that move. Personally, I went break even as soon as we broke above this area of interest for me, because if we were breaking above this, I knew gold was going to continue up. And as I always say about my stops are where the trade idea is wrong. So if we rejected off this yet again, that would have confirmed to me that we were probably going to be even more bearish and break below these lows and probably have a bigger correction. To me, it's pretty simple. High, low, higher low. Make sure we respect the swing low, place my stops where the trade idea is wrong, targeting the range high in this case, not a breakout of the range high, and using a bullish candle closure as my entry, once rejecting off the higher low. So a quick few lessons from this trade. Macro and structure always have to agree. The best setups happen when the fundamentals and technicals are saying the same thing. The second thing is staying flexible. Gold can flip very fast, so I keep my bias fluid and trade what's actually happening, not what I want to happen. I was very quick to turn around from these gold shorts that I was in to a flipped bias and ended up taking the proper gold longs here. If you guys want to see how I execute these in real time, I post all my trades and setups across my socials. When I take a trade, it usually goes up within the same hour on my channels, so you can follow along while it's happening, not just after the fact. Make sure you're tapped in on Instagram and TikTok specifically, because that's where I post my live updates, my setups, and my macro commentary as the markets move. That's gonna be the full breakdown for today. Short into this drop and long into the reversal, both backed by macro alignment and market structure. I appreciate you guys for watching. Drop a like and hit subscribe if you're new, and we'll catch you guys in the next one.